Hello, good afternoon, everybody, and welcome to the third Essentials for Financial Planning. This has certainly been one of our best attended events, with us hitting the cap of the maximum people in the Zoom call. So welcome. Once again, my name is Dale Franklin, and it's a pleasure to be hosting you all. Today's event is on navigating Naspers. Naspers, for all of us, has become both a blessing and a curse. It dominates the markets and it's produced great returns. But the heavy weighting in the index means that it's unwieldy in client portfolios. Inevitably, we all haven't had enough, and we've all been underweight the index, which has caused some drag in client returns. So today I want to take you on a journey, and we're going to talk about how all of this has happened and how Naspers has become the behemoth that it has. Our guide for today is David Gibb. David Gibb holds a BSc medical degree from the University of Cape Town. He's a CA. He's also a CFA charter holder. He's been in the investment industry since 1994. His career has spanned various roles at Stanlibs, including equity research, notably in technology, media, and the telecom sectors, and portfolio manager of the award-winning Stanlib Global and Science and Technology and Stanlib Industrial Fund. He joined Anchor in 2012. David's focus has been on global investments across all major geographies. He's a multiple Raging Bull winner, and during the 2008 crisis, consulted to Naspers around their technology acquisitions. So we certainly have a wonderful host for today. If you do have any questions, please put them in the Q&A, and we will allow questions at the end. And with that, I'm going to hand over to you, Dave.
Thank you, Dale, and welcome to everyone. Let me just share my screen. So today, what I hope you will learn from this session is, some of the history of Naspers. How did the Tencent acquisition happen? There are lots of other things that Naspers does. Understanding Naspers and Prosus and why Prosus listed last year. Some comments on Naspers and client portfolios. And then a solution that we've had for dealing with overweight positions in Naspers. What other alternatives are there? And of course, the most important thing is that you get one CPD point. I don't often think of emigrating, but when it comes to the time when I need to get all my CPD points together, it's certainly one time when I consider emigration. So let's move on. The history of Naspers, it's a long history. The business has been around for 105 years. And we've had some very colorful parts in the history, but I mean, if you break it down around the business, it's been about print media, which they are still in. That was the first business. Then they started pay TV, and that was in the mid-80s. And then the internet arrived in the mid-90s, and they were soon to latch onto that. And I think what makes Naspers different in the South African context is that there were lots of other media companies around. There were probably a total of 4 big media groups. And Naspers is the only one that's really been able to manage this transition away from just print media to electronic media and to the internet. But let's really go back to the start. The bulk of the history of Naspers has been about print media. And their first business was De Becker. It was published in Dutch, and the newspaper was a daily that started in 1915. Now, in December of 1914, some prominent Afrikaners had got together in Stellenbosch and decided that that the Afrikaans people needed a mouthpiece, that they needed a nationalist newspaper to really express the views of the Afrikaner people. Times were tough in those days. The Afrikaners economically and politically were not well represented. So they launched De Burger, and it was a Cape-based daily. And the first editor was a chap by the name of Dr. D.F. Milan. So if we move on from De Burger, things moved on pretty quickly. So in 1917, they bought Die Volksblad, which was a Free State paper. In 1918, they got into book publishing. And then over the years, they launched several other newspapers like Rapport, Die Beeld, and then the Daily Beeld. They got into magazines, and things really moved on very well. And the bottom line is they were a very good newsprint or print media operator. And there's a big gap in the slide, and it's really the first part of the century for a nationalist newspaper. Their party that they represented was typically a minority party, so they were an opposition party. And it was really in 1948 where things changed. We had a pivotal election in 1948. It was just a few years after the war, and things had been tough in the country. There were fears around communism, and racial integration was a big issue. So in 1948, we had this election that was extremely close. And I really just want to raise this because it's worth remembering how close the election was. The United Party, which was represented by Field Marshal Smuts, won the popular vote. They won the urban areas, and they had the majority vote by about 11%. They won 74 seats in Parliament in their coalition. The Nationalist Party won the rural vote, but because of the representation of the votes, they won the election, and they won 79 seats versus the United Party 74 seats. And really, the rest is history. From 1948 to 1990, the Nationalist Party was in power, and the Naspers was the was basically the mouthpiece for the party. So I think what's important, though, is that they ran their newspapers extremely well. One of the things that happened was Naspers was a Cape-based group. Obviously, when they bought the Volksblad, they had expanded into the Free State. But it was in 1965, I think in November of 1965, they moved north and they came into the Transvaal area. And they started a press war with some of the other groups up here, in particular the Perscore group. A lot of the groups up here were more verkrampt relative to the more verlig group. Naspers was seen as more verlig. But over the next sort of 20 years, there was a press war up in the Transvaal area. And eventually the Beeld was launched. It was a daily paper, and they ended up winning the press war. Perscore eventually, fell away to some extent. And Ton Vosloo, who's shown here, this is a cartoon from a chap called Fred Mouton, and I've just taken this from Ton Vosloo's book. But Ton Vosloo was the editor from, I think it was 1977 to 1983. So he played a part in the success in the Northern Press War. And just funnily enough, what happened at the time was Perscore, there was a massive circulation fraud. Perscore was found to have dumped a whole lot of unread newspapers in an unused mine dump on the West Rand. So eventually Naspers, they became well represented in the Transvaal, and it just showed their success in the newspaper field. So based on his efforts as a successful editor, Ton Vosloo became, and this is the first time when I really start talking about the individuals who've led Naspers. So we'll start in 1984. Ton Vosloo took over. Ton was brought up in Uitenhage in the Eastern Cape. he experienced a tragedy early in his life. He was a little boy when his dad died and his elder brother died, but he was a very tough guy. He loved writing, and he became a journalist in his teenage years. He used to write as a schoolboy. He loved writing about sport. And over the years, Ton, he had various roles within different newspaper groups, but eventually he became the editor of Beeld, and he obviously was one of the reasons why they won the press war in the Transvaal area. So one of the things that Ton had to deal with was the rise of television. Now, this was the first threat to a print media business model, the first threat certainly to Naspers's business model since the early 1900s. Now, the television had started in 1976. I just had a quick look yesterday. The first broadcast was January 1976 with Dorian Berry and Marnitz. He was the presenter. The two of them presented. Now, initially it wasn't a problem because they didn't really show any advertising on television. But that changed in 1978. And from then on, the newspaper groups were under a lot of pressure dealing with this, the threat from television. It was a monopoly that was controlled by the government. And so Ton was under pressure. Luckily enough, in December of 1984, he received a call from a young man in New York who had just finished his MBA at Columbia Business School. Sorry, Rob, can you go on mute there? So he received a call from this young man, and the guy had done an MBA on an African version of home box office. So HBO, which was a pay TV channel in the US, and the young man's name was Becker. So Ton had the foresight to offer Becker a job. Quickly he came back, and he was the personal assistant to Ton in 1985. And this is a picture that I've taken from Ton Vosloo's book. This is Act 1, Scene 1 for Mnet. That's Jamie Ace in the middle, the filmmaker, and this was taken in November of 1985. So Becker, he was in his early 30s. I think he was a 31-year-old at the time. He set about establishing a pay TV channel called Mnet. With the help of Ton Vosloo. Ton had the political connections. And of course, what they did is they drew in all the other daily newspapers because it was a threat to all newspapers. And they drew in even small papers like the Natal Witness. Everyone had a stake in this so that they could all benefit from a new television channel. So what happened? I mean, over the years, Mnet became a great success. It listed in 1990. And then they decided to expand outside of South Africa. They went into Western Europe. They started a business called Fullnet, which they sold to Canal Plus in 1996 and they made quite a lot of money from that. They went into Greece. They went into Thailand. And of course, they were big in Africa. And I mean, I think this was an important move for the Naspers group. It was the most radical thing they'd ever done. And it really paid off. And I think what's important here is that it opened their eyes to looking at new areas. If there was a disruption on its way, I think the mentality within Naspers was, let's embrace it. Let's not avoid it. And that's part of the reason, why we've seen the demise of so many of these other newspaper groups. So that was, and pay TV, basically, they've had pay TV until it was unbundled. MultiChoice was unbundled last year, and it's no longer part of the Naspers group. So if we go back, I mean, let's just focus on the next part. The internet became, that became a big thing in the early to mid 90s. And this was another big threat to the business. And Ton Vosloo had always been a print media man. Koos had run with pay TV, and he had shown what a competent operator he was. And at that stage, Ton decided to step down as CEO, and Koos Becker, he took over in 1997 and as CEO. Now, Koos Becker is a very private man. I mean, not that much is known about him. I'm sure, you probably, when you look up on the internet, there aren't that many interviews about his life. And not that many books have been written. I mean, Anton Harber wrote a book about him. It's actually hard to find. I don't know if it's still in print, but it was published in 2012. But Koos was born at Potchefstroom in I think it was 1952. So he was born and he was brought up on a farm. His dad was a cattle farmer in the Heidelberg area here in Gauteng. So he's a man of the soil, and he's pretty much retained that. He's got Babylon Storen. He loves gardens. He loves trees. He's also set up the Newt, which is a wonderful estate in Somerset in the UK. And that really is just showing his roots as a farmer's son. Koos is also, he's very much an introvert. One of his colleagues described him as an introvert and an extrovert's job. And he's always been known as Koos. He's, a very informal person, but certainly a visionary and a bold and extremely decisive person. So there's an interesting story about Koos. Mr. Johan Rupert. Now, they were in a partnership when they went into Western Europe with the Fullnet business, the pay TV business. But anyway, one day, Mr. Rupert called the Mnet offices in Randburg, and he tried to get hold of Mr. Becker. And he went via the switchboard, and he couldn't get through because no one knew who Mr. Becker was. So he was just known as Koos. So Koos, then he took over the business, and I think he started showing his visionary leadership. Well, he had shown it with pay TV, but one of the important things when you're a visionary is you need to grasp the major trends. And this was something that Koos was all over, always focusing on the major trends. And we used to get that feedback from the CFO at the time, Steve Pacek, always talking about, Koos is focusing on mobile. He's focusing on the internet. And this was a thing, I suppose, that always encouraged him. He probably had the confidence, having moved into the pay TV industry and done it successfully. He had the confidence to take on all the new trends, and certainly the internet was one of them. The second thing that that always stood out for me about Koos Becker was he always spoke about the life cycle of a business. It's no use being stuck in the mature phase of a business if you have a whole lot of divisions and they're all maturing. You've always got to be adding new areas. So always introducing early stage companies, and they would then produce value over the long term. And so it was really when the business invested in Tencent. Now, if we go back to 1997, their first sort of forays into the internet, the first one was MWeb. MWeb was listed for a while. I remember covering the company. Antoine Roux, who was one of the early guys in Fullnet, and a close confidant of the founders of Mnet. That was not a very successful operation. I remember one year, I think MWeb lost about 1.5 billion rand, And they really were focusing on the ISP market. And I suppose copying something like AOL. And they tried ISPs in other parts of the world too. So their initial forays into the internet were typically failures, and some of them were huge failures. They lost a fortune in several Asian markets, but they kept on trying. And remember, I mean, we went from 97, then we had the tech bubble that burst in 2000, and there wasn't really anything to show for the internet division at that time. But they had set up, MIH had set up, which was a subsidiary of Naspers, had set up an office in Hong Kong. And there were two chaps who were based out there. There was Charles Searle, who's still with Naspers, and another chap called Hans Harwinkel. Some of you may remember his name. He's no longer with Naspers. And they were trawling around looking for internet assets in China. And they came across a business that had been founded by Pony Ma. Ma is a very common name in China. It's, you know, the equivalent of Smith here or Van der Merwe. And he had started this business, Tencent, with some of his college friends in 1998. And they had two shareholders, big shareholders. PCCW owned roughly a quarter, and it was run by a chap called Richard Lee. And he was the young son of Li Ka-shing, the richest man in Hong Kong. And the other one was, the other share, also about 25, was owned by a business called IDG Ventures, I think. And it was after the tech bubble. No one really wanted to invest in the internet. And some of these, you know, these two shareholders were looking to exit. So Naspers, after much deliberation at the board level, and the talks went on for a long time, in 2001, they bought 48% of the business for $32 million. There wasn't much revenue to show for it. At the time, Tencent was involved in instant messaging, and they'd seen that the usage of instant messaging, you know, was a popular product, but it certainly wasn't a profitable market. Well, certainly wasn't really profitable yet. But what I think what Naspers really learned then was to focus on founders. They learned from the Tencent deal that if you find founders who you believe in, then rather back the founders and let them get on with it, and don't try and start a business yourself in a foreign country. And it's a formula that they've applied across the world since then. So they bought into Tencent, and Tencent has then morphed into lots of other things. It went into gaming, and it's now, you know, moving into the industrial internet. They've got a cloud business. They're in payments. And frankly, Tencent for me has become one of the great internet companies in the world. So if you look at, this is just tech through the decades. These are the market caps of the biggest tech companies in the world over the different decades. And you'll see that Tencent started popping up on the top 20 list in 2010, in December 2010. It was number 18, just relatively small still. They'd moved into gaming at that time. Initially, they didn't make the games themselves. Now they actually produce a lot of the games themselves. And in June of this year, Tencent was the sixth biggest internet or tech firm in the world, and pretty much vying with Alibaba as the biggest in China. So a wonderful business. Pony Ma is still in charge, a very understated man. In some ways, I think it's a better run business than Alibaba. And I would be happy to own Tencent for the next 10 years. A wonderful business, and you can understand why Naspers would be reluctant to unbundle something, a business like this. So Tencent has done wonders for Naspers shareholders, and it's really lifted off. And the other thing about Tencent, it's not a one-trick pony, which you could argue Facebook and Alphabet are, very dependent on internet advertising. they've always had a very nice spread of revenues, which has made them very resilient and made them one of the best quality firms in the world. And what this has done for South African investors is enormous. If you look at the long-term returns, I'm sure you guys have looked at this is the annual yearbook that Credit Suisse put out. But South Africa is still, it's the third best performing market since the year 1900. So almost 120 years. Obviously, the early years, the returns came from the commodity area, firms like Anglo American and De Beers. But in the last sort of 10 to 15 years, a lot of the performance has come from Naspers. So if it wasn't for Naspers, things for, certainly for local shareholders, returns would have been much worse. But that really takes us on to the next person who took over at Naspers. So just concluding on Koos Becker's reign as CEO, he's almost become this mythical figure in the South African business community. He has made so much money for shareholders and staff, and he has now become the non-executive chairman. I'm not sure how involved he is with the business now, but he is obviously still a huge shareholder. And he's along with Cobus Stoffberg, they have a fair share of the A shares, the high voting shares. But if you go back a few years, in about 2013, Koos Becker decided that the business needed more operational expertise. Naspers Pay TV was running itself after a while. It was a monopoly. The print media business was well established. And so the difference with the internet requires broadband, it requires good infrastructure. And it was difficult to create a big internet business in Africa. I mean, there's just no broadband to speak of. So they had to go outside of their borders. They had to look in other parts of the world. They had to create a global business in the internet area. So initially they went in by just buying stakes in other businesses. But I suppose after a while, you need to become an operator yourself. So they hired a chap, Bob van Dike. He was a senior exec at eBay, and he was brought in to run the e-commerce division. Now, at the time, the anointed, the likely successor of Koos Becker was a chap called Antoni Roux. And I mentioned Antoni earlier. He had run the MWeb business, and he had run the internet division for Naspers. He had spent a lot of time in Asia and was a big backer of their stake in Tencent. But he tragically died in 2012 of pancreatic cancer. And so Bob was almost fast-tracked into becoming CEO, by 2014. So Koos Becker stayed on as CEO a little bit longer than he would have wanted, and Bob took over. And Bob, he's from Holland. He's an ex-McKinsey man. He started the next journey, the next chapter for Naspers. And I think being an ex-McKinsey guy, what he's been able to do is establish more structure. His communication with the stock market is better than previous management. He likes to focus on their three major segments. I'll come back to Tencent in a minute, but he likes to focus on their three major segments. These are classifieds, payments and fintech, and food delivery. Now, classifieds is an area that Naspers had been interested in for a long time. I think Koos Becker had met the guy who ran Shipstead, which is probably they're the biggest in classifieds now. I think they'd met at the Harvard course in the late 2000s. And I think Naspers wanted to sort of copy what Shipstead was doing in classifieds. So they built up a big portfolio in emerging markets. And it's a wonderful business, but it's a niche. I'm not sure if it'll become a huge business, but a very high margin. And it's becoming, it's a lot further down the road than the other two divisions. So an excellent business, and in time will become hugely profitable. Payments and fintech, It's an area that has a focus in India. Roughly half, I think, of the revenues come from India. India is a fairly competitive market, and it's hard for me to say how successful that division will be. There's some excitement there, but there are lots of different fintech players. So I would say, time will tell. And then the most recent division that they've added was food delivery. And I think here they have quite a big global presence. They don't have majority stakes in everything. They have a nice big stake in Delivery Hero, which has a big presence around the world. And food delivery, for me, it's very exciting. It still has to evolve, and the business model has to become established. But there's plenty of growth from these three areas. And I think Bob is doing an excellent job communicating the prospects for these. And I think in true sort of Naspers style, they always have a potential blue sky area. And this probably at the moment is in education. So EdTech, as it's known, they've made several investments in this category. And COVID-19 has really helped with, sort of escalating or pushing the move into EdTech. One of the things about education, along with healthcare, is that there hasn't really been deflation over the decades. And education has just become a bigger and bigger part of GDP, and it's a bigger and bigger part of our spend. And the same applies to healthcare. So it just means that those two sectors are ripe for disruption. If you can try and get away from the teacher student ratio, which has typically been fixed over the years, and the internet could change that. This could become a massive area. And there was I think there was an interview in the Business Day yesterday just talking about some of the opportunities in EdTech. But it's early days. We don't know what could happen here. And frankly, they would have to increase their stakes in some of the businesses they bought into. But there's lots of potential. So this is the new structure for Naspers, as explained by Bob van Dike. So we have the e-commerce division, and I've spoken about those three areas. We've got ventures, which is mostly EdTech related. Well, certainly that's the most promising for now. And then we've got Tencent. So Tencent is, between 80 and 90% of the value of the group. E-commerce, there's potential there. I'm not sure how big it will become. Maybe $50 to $80 billion in time would be good. And then ventures, it's too early to say. And the original business is now within Naspers. It's Media24, and that has all the old newspapers, magazines, and book publishing. Now, one of the things that Bob has, since he's taken on his job, and even before he joined, one of the problems with a successful platform company, and there are not many platform companies outside of the US and Asia. Most of them are on the West Coast and Silicon Valley, and here we're talking Amazon, Alphabet, Facebook, and the others are based in China, and those would be Alibaba and Tencent. There are very few platform companies elsewhere in the world. In Europe, they've always battled. They don't really have a true platform business. They've got SAP, but you would argue it doesn't have the same sort of platform economics that those West Coast operators have and the ones in China. So what's interesting about Naspers, although it's via an investment in Tencent, they are the only platform company certainly in Africa and probably in Europe where they have true platform economics. And what that means is if you have network effects working for you, your business can become absolutely enormous. You tend to develop a monopoly, and your profits can soar over a couple of decades. And what's really happened in the South African context is they've just become too big for the local market. And I suppose over the years, they've had more and more feedback from shareholders. Look, we can't have your company representing 20 to 30% of our portfolios. You are too big in the index. You need to try and move into another market where you can draw on new capital and have new buyers of your shares. So this was one of the big challenges that Bob took on. He's tried to solve it, but I mean, frankly, it hasn't really worked for now, because what's happened this year is, the rest of the market has done relatively poorly, but tech has just kept on going because COVID has been seen as net positive from all the platform companies. So what they did last year was they decided, let's make this move. Let's go to Europe. We have an affinity with Holland. Even if we go back to the original De Burger, which was published in Dutch. But there was always a Naspers office in Holland. Fullnet, I think, was based in Holland. And I think Chris Becker, he always was a big fan of the Dutch football team. So they went, and obviously for tax reasons too. It's a very favorable tax regime in Holland. So they decided to issue shares to Prosus shares to existing Naspers shareholders and list. They didn't raise any capital over there, but it was a way of moving to bigger pools of capital. So Naspers now owns 73% of Prosus. It's also been included in one of the important indices there, although we haven't really seen the impact on the discount closing yet. And this has now become the new problem. Well, it was always a problem in that the discount had started rising over the years. If you look on the left-hand chart, we have Naspers' discount to NAV. It was traditionally between 20 and 30%, which is a sort of discount you would have seen from Remgro. As they got bigger and bigger, it maybe went from 30 to 40%. But with the shift now to the Prosus listing, the discount has really got out of control, and it's now over 50%. So the Prosus discount, which is the first discount that you have to take on, and that's about 30%, 30 to 35%. And then Naspers is another 20% discount. So you add the two together, you're at a 55% discount. It's just way too high. And you end up now, if you buy into Naspers, you're paying actually a relatively low P. I think it's about 18 times over 12 months of earnings. So this problem has not been solved, right? And when they moved to the Prosus listing, they did say this is the first step. It's the first step of many. We just don't know what the next steps are. Even The Economist had a piece on this just a couple of weeks ago, talking about 10 cents more. 10 cents is worth more than everything else, and the discount is too wide. This just refers to the discount at the Prosus level, and then there's an additional discount for South African shareholders who own Naspers. So what can they do? The thing that we think is most likely is that they will reduce their stake in Prosus, and they will issue more shares to Naspers shareholders. So effectively just lower the shareholding in Naspers, and they could go down to 50% plus one share. They have approval from the South African Reserve Bank to do that. The question is, what would be the tax implications? So would you distribute those shares as a dividend? And would there be like a dividend withholding tax on that? But that seems like the most likely next move is to lower the stake. So then you would move further up the stack, closer to, you'd have more Prosus in your allocation than up to now, we've just had a much bigger stake in Naspers. And why not just unbundle all of the shares, The problem with that is the moment Naspers goes below 50% of Prosus, then you've got a problem with SARS. And SARS then deems, once you go below 50% in Prosus, SARS deems that there's been a sale of the underlying assets. and then you would pay capital gains tax on this amazing investment that you made in Tencent. It could be something like $30 billion of capital gains tax. So how you get around that, I'm not sure. I mean, I've heard an idea on how they could do that, but I'm not sure how feasible it is. So where does Anchor, where do we sit with our view on this combined group right now? I mean, I would tend to think I would like to own both of these. In recent weeks, we've had a preference for Naspers because this discount has just got so wide. And there's a lot of pressure building on Bob van Dijk to do something about that. The question is, what are the tax implications if they do distribute more Prosus shares? So I would go with a combination, have a combination of both of these shares. We have an offshore tech fund. In fact, we have an equal weighting, slightly more in Prosus than Naspers. And of late, we've just been buying more Naspers because this discount has got out of control. Whereas when Prosus listed, we tried to go in with a much bigger weight in Prosus itself than Naspers. So our long-term view on this group would be they have a fantastic underlying asset in Tencent. The outlook is excellent. It's a conglomerate. It's not a one-trick pony. It can grow and compete with Alibaba over the next several decades. The real risk is this building Cold War between the US and China, and that will obviously impact Tencent's ability to grow outside of China. But a wonderful asset, and obviously that Cold War is not going to disappear if Joe Biden wins the election. There might just be a slightly different strategy that the US adopts. So an excellent asset, and we would be happy to own a lot of this asset in portfolios. Now, the thing with tech is tech has become such a big part of the US index and certainly of the Chinese sort of indices. In Europe, it's much smaller. But, if tech is up to 35 to 40% of the US market, and Naspers of the SWIX is, along with Prosus, is about 28%, you don't really want to have a capped SWIX weight of only 10% in Naspers and maybe 3.5% in Prosus. You're only at 14% in the tech sector. There's nothing else in South Africa that offers you platform economics. I mean, there's talk that our data could list again in South Africa, but that's not really a platform business. And I would regard it as a poorer quality tech company. So one of the solutions that we've come up for our clients was to potentially diversify. Think about investing in some of the other great tech companies around the world. So, we launched a global, and this is not a discussion about products at Anchor, but we launched a global tech fund about a year ago. And the idea was, this is our solution to clients. Keep your Naspers and your Prosus, but if you want more, or if you want to diversify slightly away from them, we will have in our fund, we have 10% in Alibaba, we have about 11% in Naspers and Prosus combined, and we have, big weightings in things like Spotify and Microsoft. So that's the Anchor Global Technology Fund, and I'm able to assist Shaleo, who's he covers the gaming area and a couple of other areas. And Henry, I'm sure you've heard Henry Biddlecombe on the radio. He covers a couple of shares in our portfolio as well. So I think this brings us to the end of my talk. I think what you should walk away with when you think about Naspers, this is a business that stayed on the leading edge for much of its history. 105 years. They've always focused on advancing for the next phase of disruption. And on their website, if you go onto their website, they talk about being entrepreneurs since 1915. And I would agree with that. And particularly, Ton Vosloo had the foresight to go with a youngster who, called him from New York And he had full faith in Becker, and they had this amazing partnership for a long time. And now, the business has gone global, and they are certainly trying to stay at the leading edge, but they have a fantastic underlying asset for now. Years ago it was pay TV, but now it's Tencent, an underlying asset that is likely to continue to create value for shareholders, even if the discount, messes with that return from time to time. But we obviously are very, very much in favor of investing in this company. So Dale, I think that's pretty much my time up, and I think we can open up for questions now. And hopefully you've learned something in this time. Over to you, Dale.
Thank you very much, Dave, and thank you very, very much for giving of your time to share the story of Naspers. It was certainly very informative. Guys, we are open for questions. There's been a great number of questions about the slideshow. We will share the slideshow to everybody involved, but I'm going to try to group some of the questions together if I can. We've got a fair amount to get through. So first question for you, Dave, is what is your view on Bob van Dijk?
I think Bob is, he was. I've never met Bob. From the people I've spoken to within the group, they like Bob. What's interesting about him is that he took on the position. He was quite young, and I wasn't sure whether he was going to be bold enough and as decisive as Becker, but frankly, it's impossible to succeed, to succeed a chap like Becker and be the same kind of person. So I think Bob actually comes at the right time for Naspers and Prosus. He's probably adding a more structure to the group. As I said, he's a good communicator. He's trying to become. He wants them to become better operators. And I think there's always been scope for them to be better operators. Pay TV in some ways ran itself, as I said earlier. And, the print business had been so well established. So they need to be better operators in the internet. Frankly, their hit rate over the years, they had a lot of disasters. I mean, that's the story of the internet, as long as you have one or two successes. So I think he's probably going to try and improve their hit rate on the internet. And be better operators. And for now, I would give him a big thumbs up. He seems to be doing a good job.
Thank you, Dave. Where would you see Naspers 5 years from now?
Well, I think the platform economics, that's the important side of tech. Is Tencent is going to keep on growing. The earnings growth we've had from them in recent years has been high, and I think it will continue to be high as they move into the cloud, as they move bigger into the industrial internet. So there's a slight pivot happening within Tencent and not just being focused on the consumer. So I think there's a lot of potential there. And then just focusing on these three divisions, classifieds, fintech, and food delivery, there's lots of growth in those areas. So I know they've spoken about adding $50 billion of value from those three divisions, and then adding another $50 billion by trying to get rid of the discount in the business. I mean, the market cap now, the business is $150 billion. And you could see that rising by another 40% quite happily in the next while. So there are good underlying growth there's good underlying growth momentum in all of those divisions that I've spoken about. And then that EdTech area, that's potentially the cream on the top. It's an area that needs disruption, and maybe they'll have some success there.
Dave, how has your global tech fund performed this year compared to Naspers and Prosus?
Since we launched, we're up about 58%. That's just over 12 months. I think on a combined basis, I think we've done better than Naspers and Prosus. And that's partly because of the discount problem. The discount has widened at Naspers and Prosus. So Tencent has done much better than that. But, we've seen the discount go from, the mid-30s to the mid-50s over the last maybe 15 months or so.
Interesting one, Dave. Welcome Yazani owns a stake in Media24. Is there any point in staying invested there? Looks like back investors will be better off selling WY and buying Naspers.
Right, I'm no expert on that on that structure. I mean, obviously there were two structures they put in. They put in the multi-choice structure, which paid off enormously for the empowerment shareholders. The one in Media24, it's a mature business. It would be, obviously the returns would be lower. I can't really give advice on that. All I would say is that print media is a mature business. They've done their best to innovate in that area. Maybe some of their competitors are not as well funded. And I think that's an issue for me looking forward is will Media24 always have a big brother to back it? Because that's really what we need for the newspaper industry. But coming back specifically to that question, it's hard for me to say. It's a mature, so you get the return certainly to be lower than you would get at the Naspers level.
Dave, is it too late to invest in the Global Tech Fund? Have we missed the run?
That's a good question. The way we've positioned that fund is we've let our cash build up in the last 2 or 3 months. It's been a sector in favor. There's been also a lot of sort of Robin Hood activity. Those are the chaps who operate off the Robin Hood platform in the US, buying a lot of the tech shares. So we think there's been a lot of speculation in some of the names like Tesla. Share splits have done too well. The Apple share split and the Tesla share split. So we've become a little bit more cautious, and we've built up our cash holding. And in that sense, we've also upped our weighting in the Chinese companies. We've felt that Alibaba and Naspers and Prosus, for example, have offered reasonably good value relative to some of the US names. So we've become more conservative. And in some ways, we're trying to cushion the blow, if there is one, for unit holders. But long term, the prospects for tech are fantastic. And I think, technology is now moving into areas like, hydrogen space, green energy. There are a lot of potential tech areas there as well. So long-term prospects are good. Short-term, there might be some problems with valuations.
Dave, next one. I'm not sure you'll know the answer to this, but we'll try. How did the name Tencent come by?
I don't know. I'm sure there's someone else on the call who could answer that.
Unfortunately, I think we've stumped Dave on why it was called Tencent. Dave, why not just distribute the Tencent shares to shareholders? And the unlock of the discount will more than make up for any CGT.
Yeah, I mean, one of the things about investing in China is, you build up a relationship with the authorities too. Naspers has also had an investment in Russia, Mail.ru, and there's loyalty is seen to be important in those markets. I mean, several years ago, the president of China came out to South Africa. I think it may have been Jiang Zemin. And I remember, he went to the multi-choice offices in Randburg. So if obviously they've had a lockup agreement with the Tencent. They sold a few shares, a while ago. That lockup agreement expires in March of next year. So they are entitled to sell some more shares. But it's such a wonderful investment. And I think they want to keep, they want to stay on the right side of their relationship with the Chinese people. They've been good partners. In fact, they were one of the few international tech or international media groups to to really invest in China. I remember going to a conference, funny enough, in China. It was a Merrill Lynch conference, I think around 2003. And I remember I think I was the only non-Asian person there. It was in Shanghai. It was a real backwater. And the only company of note at the time was a business called Legend. It became Lenovo. They used to make computers. And, Naspers was there in those times investing in local companies. So I think they built up a great relationship with the Chinese people. And they'd be reluctant to give that up.
A quick comment from our esteemed financial planners. It turns out Tencent, unlike the other big three outfit Alibaba, derives its name from a fusion of the Chinese characters Teng and Zung, which means galloping fast.
Sounds about right.
Dave, would you see MSCI China ETF as a diversification alternative?
Well, there are a lot of, I can't remember what the components of that ETF, but remember there are a lot of state-owned companies are in the China passive index, I think. So I'm not sure if you're going to have a lot of state-owned banks in there. It's quite tricky. You need to look at the financials exposure, and those businesses are facing a lot of pressure, those Chinese banks from, the Ant Group, which is expected to list in the next couple of weeks. It's owned by Alibaba. It's a third owned, and WePay, which is, these payment companies, fintech they're competing and taking a lot of money away from the big state-owned banks in China. So it's a question of how big, the non-tech portion is in that ETF. And I suspect it's a big part.
Dave, final question for today. What is the most exciting tech share that you are watching at the moment and why?
I'm spending a lot of time on hydrogen at the moment. So, I've been spending some time looking at a company called PowerPlug. So that one looks interesting. But, in our portfolio, we've got delivery here. I'm very excited about the prospects for that one. Zillow is another one that we bought in this downturn. That's US real estate, online real estate. Intellia Therapeutics, which is a CRISPR gene editing biotech business, we bought in also during the sell-off. There's so many exciting areas, but I think the big transition that's coming is the energy transition, and trying to find a tech business that will do well out of that. That's really front of mind for me.
Dave, once again, thank you so much for your time. Thank you, everyone, for attending. And we will send out the slides and the YouTube video. Please, as always, get hold of me if you have any questions or any ideas for future sessions. Thank you very much.